Everybody, this is Bennett Tchaikovsky. Hope you're doing well today. I tried doing it in one video, but the first 45 minutes were apparently I just had too much stuff going on yesterday. But in any ways, here's part two. We're going to finish that large comprehensive question. So this is by myself, the accounting professor, known on YouTube. This presentation is copyright 2008 to 2024 by Bennett Tchaikovsky. All rights are reserved. Any redistribution is expressly prohibited without my prior written permission. Opinions expressed herein are those of myself and not Irvine Valley College or the South Orange County Community College District or any other affiliated parties. So coming over here, let's go ahead and get back to the question. So we've gone through, we've input in the initial transactions, and now we're ready. We've made a trial balance. Everything balances. We're now ready to prepare an income statement for the year ended December 31st, 2028. Remember, when it comes to an income statement, what we're doing is we're showing our revenues less our expenses, or how much we went through and earned during a particular period of time. So coming right over here. So we're going to basically have our company, which is going to be DDI. And we're going to go ahead and copy this, prepare an income statement for the year ended. We always want to do a header, DDI income statement for the year ended 12/31/28, right? So we're going to have basically that statement. So what we're now going to do is we're now going to basically say, okay, for the income statement, we're going to take our revenues right over here. Consulting services revenue at 268. Total revenues is going to be at 268 less our expenses. Okay, our expenses over here are going to be consulting services expense and utilities expense. So my total expenses are going to be $80,000. And so my net income is going to be 268 minus 80. Now, when it comes to formatting financial statements, if you take my class, I really don't care about the double underlining and the dollar signs and all that other kind of stuff. You may have somebody that does care, but I really don't. Why? Because when you're first learning accounting, it's a lot of work. You're learning a skill, and frankly, you're not at the point yet where you're going to be preparing financial statements. Coming over here, if we look at Meta Platforms, and if I look at Meta Platforms, their most recent quarterly report, right? Obviously, for the income statement, you're going to see statements of income statement for the 3 months ended, the year ended, and you do see, oh, they've got underlines. But what I do want you to notice, though, is when you prepare financial statements, you do not see debit and credit. Do not, if you're taking my class, I will take points off. But our income statement is going to be revenues, or what we earned, less our expenses, or those costs of those revenues, or basically the costs associated with the business. That's our income statement. Now, what the next one we're doing is we're preparing a statement of retained earnings. The statement of retained earnings is telling us, well, we went through and we made $188,000. So how much of that are we actually going to go through and keep? That is our statement of retained earnings. And effectively, what this is going to be well, basically our statement of retained earnings, DDI, statement of retained earnings for the year ended 12/31/28. How did I know it was for the year ended? Because it says right over here, for the year ended. Okay. When it comes to retained earnings, they're starting operations at the very beginning of the year. So we've not had any sort of earnings previously. So my beginning retained earnings are going to be 0. I'm then going to go over here and add in my net income. My net income is 188 less my dividends. My dividends over here are going to be at 38,000. So my ending retained earnings is going to be $150,000. Okay. So that's of the earnings we had of 188,000. We gave back to the shareholders a $38,000 dividend. And now we're at 150,000 of retained earnings. Okay. So we come over here to the next one. Now it says close out all temporary accounts to retained earnings. What is a temporary account? It is going to be revenues, any expenses, and dividends. These are temporary because it's for a period of time, right? The balance sheet is going to be a snapshot in time or as of, because our cash balance, well, it changes every day. But when we're looking at the income statement, this is telling us for a period of time. It's 3 months, it's 12 months, whatever it may be. Whereas the balance sheet is as of a particular date. So let's come back over here. And so closing out our temporary accounts to retained earnings. And I did this on the other video, but we're going to go ahead and do it again, because if you are taking my class, you are going to need to make sure you know how to do this. It's absolutely critical because it's huge points on my test. So coming over here, we're closing out accounts, temporary accounts to retained earnings. Okay, so retained earnings is a part of owner's equity. We're going to have a beginning balance of 0. Okay, now, which accounts am I going through and effectively closing out to retained earnings? Well, it's basically going to be anything that is a temporary account or revenues, expenses, and dividends. So what I'm going to need to come over here and do is to so I'm going to have over here consulting services revenue. Now, what I want to do is I just bring forward the balances that are in those temporary accounts. So I've got consulting services revenue. I'm going to have utilities expense. And let's give ourselves some more room. Please take an Excel class. You absolutely need to. My Excel is not excelling. Okay. That's like Google Sheeting. Okay. Right. So coming over here, my utilities expense was 29,000. My consulting services expense is going to be a debit of 51,000. And then lastly, I'm going to have dividends. My dividends were at 38,000. So all I've done so far is, and when you take my class, I'm not going to tell you the account names. You're just going to see something over here with retained earnings and a bunch of blank T accounts. So what you're going to have to do is that you're going to have to pull these accounts individually from the income statement, right? Revenues have a credit balance. Consulting services expense, utilities expenses have debit balances, debit dividends, that's going to have a debit balance. So when I'm closing these out, why do I close them out? Because we need to close them out and begin a new period of time in which to show our revenues. If we never close these out, then Meta Platforms, their income would be not 39 billion, but since the very beginning of time, it would be a lot of money. So it's they've made a lot over time. So thank you for my own personal identity. It's great. So coming over here, right? What I need to do in terms of closing these accounts out. Again, if you're taking my class, very, very particular, right? So coming over here. So what I'm doing is I say, okay, what do I need to do to make consulting services revenue? When I'm closing out accounts, I'm asking myself the question, what do I need to do to make this go to zero? Well, I have a $268,000 credit. To make it go to zero, I need a $268,000 debit. It's now, I subtract this from here, I get an ending balance of zero. However, for every debit, I need a credit. So I'm going to go ahead and credit retained earnings, right? So revenues, expenses, and dividends, they're going to get closed out to retained earnings. Consulting services expense. What do I need to do to make this one go to zero? Well, to make this go to zero, it has a $51,000 debit balance. I need a $51,000 credit balance. For every credit, I need a debit. Over here, I'm going to debit retained earnings for 51,000. Utilities expense. To make this account go to zero, I need a credit of 29,000. I do the opposite to the retained earnings. I'm going to go over here and debit retained earnings. Dividends. To make this account go to zero, I'm going to need to credit dividends. I need to do the opposite over here to retain earnings to get 38,000. Again, this part cannot state how important it is for you to spend the time and going through these problems. I've graded so many exams over my career. We're on this very first exam. The students will go through and get this part right. They may get the trial balance, but then it's done. They don't know what to do after that. So spend the time. The more time you spend with it, the easier it's going to get, I promise. So coming over here with retained earnings, right? So I've got over here total debits of 118, total credits of 268. I subtract the smaller from the larger balance, and I end up with a credit of 150. Now, this number should look extremely familiar. Why should it look extremely familiar? Because it's going to be the same amount that we're going to see on our statement of retained earnings, right? A lot of students, they'll learn this by doing, oh, I'm going to use something called income summary. No, you do not want to do that. Not in my class. We're just going to use T accounts, and that's how we're going to go through and solve it. So we've got over here, we've got our statement of retained earnings. We've closed out the temporary accounts to retained earnings. And now let's go over here and see what we have left. So we've closed out the accounts to retain earnings. And now we're going to prepare a post-closing, not post-Malone, but a post-closing trial balance, right? So what does closing mean? Well, closing means exactly what we just went through and did. We closed out the accounts to retained earnings. So when we have over here post-closing trial balance, we're going to have debit and credit. So coming over here, what's really changed? Well, the cash is going to be the same. Loans receivable, equipment, accounts receivable, prepaid insurance, prepaid consulting services is going to be the same. Accounts payable is going to be the same. Unearned revenue, notes payable, loan payable, common stock. These are all the same. They do not change when we're going through and doing the closing process. The one thing, though, that does change is we've now closed these accounts out to retained earnings. My retained earnings balance now is 150, right? What's happened to dividends? This went to zero, right? Came over right over here. Boom, went to zero. Consulting services revenue. This is now went to zero. Consulting services expense. This is now at zero. Utilities expense. This is also now at zero. So when we go through and are doing a post-closing trial balance, all it means is that we've closed out the revenues, expenses, expense accounts individually, and dividends to retained earnings. Remember, your ending retained earnings balance must equal this over here. Do I close out unearned revenue to retained earnings? The answer is no, it's a liability. We're only closing out revenues, expenses, and dividends. Those are the temporary accounts, shows what we've done during a particular period of time. Now, very last thing to do, right? We've done the post-closing trial balance, the numbers balance. If they didn't balance, I'm not going to tell you to not say I don't care. However, what I would caution you on is time, right? If you can go back and fix it, that's great. But if you don't have the time, I give partial credit, right? That's why I use problem-based methodology for pretty much almost all my accounting courses. So now let's go ahead and prepare a balance sheet. And note, this is a snapshot in time. So it's going to say as of, or it's just going to go ahead and list the date. So over here, DDI, balance sheet as of 12/31/28, right? Is it also acceptable just to show the date? The answer is sure. You could say 12/31/28. However, I like saying it's more pronounced if I'd saying as of instead of just listing the date. So coming over here, what do we do on the balance sheet? Well, it comes back down all to this. Assets equals liabilities plus owner's equity, right? This is our balance sheet. And we can even look over here for Meta Platforms. Meta Platforms as of June 30th, 2024, total assets, 230 billion. Total liability, 73 billion, total equity of 156 billion. Then we've got total liabilities and owner's equity. So coming over here to our balance sheet, I'm going to go ahead and say assets. And now if I have set up my trial balance, my post-closing trial balance to be proper over here, I am essentially just copying from the trial balance. Remember, very important, do not put in debit or credit. That has no place on the financial statements. We're just listing them out. The debits or credits are really for our own internal bookkeeping. Okay. Our total assets are over here. And again, why do I indent on my part here, right? Well, I do this indentation so that you know that I'm adding up numbers, right? So the 642,500 is the sum of all of these assets. Could you put it below? Sure. It's entirely up to you. Can you put a double underline? Sure. Why not? But again, I'm more concerned with my students being able to go through doing, this is a lot, right? You're first learning accounting, like recording all these transactions, summarizing them, right? It's a lot of mechanical work, but trust me, it is the way that you're going to learn accounting. So right over here, we've got liabilities. For my liabilities, just going to go ahead and list these out here. Remember, this is not a classified or a top secret balance sheet, right? We're just going over here. We're learning the basics. We're going to get the next exam. We're going to be learning a lot more about, what we call a classified balance sheet, which we're going to separate basically assets into current and non-current, but we'll get to that for a future video. So my accounts payable, 17, 59, 42.5, and 30,000, right? So coming over here. So my total liabilities are going to be the sum of 17, 59, 42.5, and 30. And then lastly, we have owner's equity. For owner's equity, I just have two accounts. I've got common stock and I've got retained earnings. This is for right now. We are learning accounting. We're keeping things as simple as possible. Remember, there's a lot more complexity in financial statements, right? However, if you don't spend the time to learn this construction and kind of layer things on, it's going to be rough. My total owner's equity is going to be 344 plus 150. Now, am I done? Well, I'm almost done. The last piece of the puzzle that I'm going through and missing, I feel like the accountant who found that last piece of the Muhammad Ali, total liabilities and owner's equity. This is going to be 148.5 and then 494 for a total of 642,500. So this is the ending part to the video that I had started previously, but I got my time ran out. So, but I like to try to finish what I start. But in any event, thank you for being with me here today. If you have questions, please feel free to leave them in the comments below. And I look forward to seeing you on future videos. Have a great day.